Hi everyone, it's Red with RedDragonLeo.com, and today is Tuesday. Well, as you all are aware, Monday we did have our up move to the 1080 area, and that was all we got. As you can see here on the 60-minute chart, we did get up there to the 1080, and we reversed hard. After that, we put in a bear flag, then we came down into the close, and we gapped down again. That's looking very, very, very bearish. I really think we're going to have a crash come Thursday, Friday, maybe even possibly start selling off tomorrow. I think it will sell off tomorrow, but it might pop in the morning a little bit. Maybe. Depends on what kind of data comes out. As you can see on this 60-minute chart, it is making a positive divergence here, but also a negative divergence there. And, you know, I wouldn't hold too much water into this positive divergence because the more powerful charts with the daily, the weekly, and the monthly are all pointing down. So it's short-lived even if it gets up anywhere. So I think, if anything, it's the most it might get is up here in this area to this gap fill area. That's about it, if we get that. So and that would probably be early in the morning, and allow this to push up here and maybe put one or two histogram tower bars into positive territory if it puts any. It's not looking good for the bulls, folks. So, you know, if you guys are short, stay short. I mean, you know, this thing is going down. We got a downside target of 8,300 for you longer term people. And when I say longer term, I mean you know, like 3 or 4 weeks out, into September, basically. You know, into that Legatus pilgrimage meeting, and you know that's September 9th through the 22nd. So when you see 8,300 hit, that's our fake print. We fulfilled it. I'd expect a turnaround from that point, and that'd be your time to go long. Probably to the end of the year, I'm going to guess, because it's very possible. It is very possible, if we look at the weekly, if we go down to, say, 850 to 875 is about the same, which would be right here for the Dow, that equals approximately the 8,300 fake print area is right here. If we go down to here, you could call this entire move that we think is the end of primary wave 2 from the March low of 2009 all the way up to the high in April. You know, we don't know for sure that is for sure the final high. We have a fake print of diamond 118.16. That's 11,800 on the Dow, and that corresponds to about 1260 to 1280 on the SPX. And you know, that does seem far-fetched, but you know, back here when we fell off a cliff and everybody just kept on shorting, and when we got back up here and it started going down again, everybody thought we was going down another leg. You know, that's what everyone thought. And so, but we didn't. They just kept pumping more and more and more stimulus into the market. So that's what you got to keep your eye on, is what these people that run the market decide to do. Again, this November's election, it is very likely that after this crash bottoms in mid to late September, it is very likely that there'll be a stimulus package come out of that. And again, like I said in my weekend video, I do think that Obama will pull that wild card out and extend the Bush tax credit. So that's just to try to get, you know, Democratic control. It's political. Okay, so everybody will assume at that point that this is primary wave 3, and I don't know that it's not. Okay, but if it ends there and turns and goes back up, people will be shorting all the way. They'll short it when it gets up here, and we'll have to relook at the charts back, you know, at that time period. But I really think it's going to go up all the way into the first of the year, and I think it's going to get back up here and fulfill that other fake print. I really do. I think it's going to hit that 1260 to 1280 area, and it'll fool everybody. And then that would finally be a a move from here to here, down to here, and back up to here. I guess that'd be an A, B, C in a primary wave, 2, and that would end primary wave 2 for good. And then all of 2011, then we're just going to fall off a cliff. I think they've just run out of this, propping the market up with this stimulus crap. It's just going to be over with. And again, what incentive would Obama have to do that? Because he's going to have basically 2 years left from the 1st of 2011 to 2012. He's going to have time for, I don't guess he would have 2 years left, but he would still have time to try to rally the market into 2012 election. Yeah, that's right. What am I thinking? He didn't take office. So it'd be the next president would take office in 2013. So yes, so he'd have 2 full years, and the election would be, I guess, in November of 2012. So yeah, so he's got all that time. So you figure 2012 will be a stimulus year again, and they'll rally it again to try to bring in the next president, whatever, in the Democratic side. But 2011, the year before the election, will just fall off a cliff. It's political, and it matches up with the chart. So keep that in mind. So anyway, so that's kind of what I'm looking for. You look here on the daily chart. As you can see, this ADX line is just now starting to curl up. This thing has got a long ways to go on the downside. There's no question about it. By the time this reaches up here in the same area that we got in this area, this thing will have fallen off a cliff. I mean, it's going to give a ton of power to it as it falls off a cliff. It's just going to bury itself down there. And it's going to stay down here for quite a while. I don't see it popping back up. Yeah, it'll probably be quick as it falls off a cliff. And I think that this week, very well, this is where we're at right now on the weekly. And right now we are below this trend line drawn here. But I think we could break this, or at least tag this line right here, which is just a little over 1,000, I guess. What is it, about 1,020 or something? I think it's very easy to do that. I think we'll pierce it. I think we'll go past it. I think we're going to break 1,000. I really do. I feel that that's what's going to happen Thursday and Friday. I think people are just going to panic. We still haven't got that panicking yet. So monthly again, still pointing down. This thing is looking to fall off a cliff, folks. I mean, we done hit our first tag approximately of this moving average on the monthly, and you can expect a bounce from it the first time, but the second time around, don't expect it to bounce. It's a 50-50 chance, but the first time, it's usually good odds that it will bounce when it hits one of these moving averages. But this time, I think it's going to fall through it. So, here we are on the 15. We're basically looking down into the morning, but look how far we're already down. And we're trying to work our way back up. So I kind of think that as long as the numbers tomorrow aren't too bad, now if they're horrible again, it's just going to fall off a cliff. But if they're not too bad, there might be some small relief rally. But again, it won't go very far. If it goes anywhere, it's going to go up here at about 1065, possibly to this gap fill here, at about whatever that is, 1067 something. But if it feels it, it might just simply go stop right here at gap resistance. Because you got this bottom here, and which is now, that was support, prior support, now it's resistance. Plus it's gap window right here. Gap fill is here. So I honestly don't think it'll make it to 1067. I think it'll run up, but I think about the most you're going to see is this 1065, this top right here, if we get that high. I just don't know. There's just nothing out there. We're really looking to see a crash like 1987 come. And just like that turn date of the 26th and 27th, it's not going to be a turn date to the upside, folks. It's going to be a turn date to the downside. Gold will probably shoot through the roof here initially, at some point I do expect it to fall as the hedge funds and banks and all the big mutual funds companies have to unload the gold into the marketplace to meet the margin calls. So, when they go to do that, they're going to be dumping massive amounts, and that's going to cause gold to go down in price. So keep that in mind for those that are long gold, because at some point it's going to fall off a cliff. If this thing really goes into full panic mode, it's going to fall off a cliff. So that's pretty much all I got. Just for those of you that are short, I would stay short, and those of you that are long, I feel for you. Get out. This thing is falling fast. It's there's no reason to be bullish here. There's absolutely nothing. And if you're wondering, we got 4 days down in a row. Sure, we might have a little pause day tomorrow. Maybe close positive. 1, 2, 3, 4 days paused, then fell off a cliff. 1, 2, 3, 4 days. Maybe we pause and close positive tomorrow. But the fact that Thursday's got initial claims, man, I don't know anyone that's going to hold into that and on a long side. So I don't see it. But and here we are on the RSI. It's set to 34.43. Now remember, when it goes to 33, that means there's 66 people selling for every 33 buying. That's very bearish. That's a 2-to-1 ratio. And I think that's going to continue. There's just nothing here. There's nothing that is bullish. You got this cross we officially hit today. We've turned down here. We've hit the 50 mark as I thought we would and rolled over. I can't find anything that's bullish. Nothing. This is making up, everything in the making is for a crash come this Thursday and Friday. It's going to look ugly. So for those of you short, stay short. Okay, that's all I got, folks. I guess I'll see you tomorrow on the blog.